How's it going, everybody? Today we are going over today's price action. Today is Wednesday, April 1st. We took a short to Asian lows. It did not play out. We're a little negative on the day, but that's okay. So let's go into the trade recap. On the 4-hour time frame, you can see that we swept out this intermediate high within this bearish fair value gap. Currently, we are delivering from a weekly bullish fair value gap down over here. But since we kind of filled our draw up here, which is these fair value gaps, and if you go to the lower time frame, we're starting to reject off this gap. I don't have ES pulled up just because we didn't have any SMTs today, but both pairs are correlated to the downside. So market opens at 6:30, which is right over here. You can see that we tap into this 15-minute fair value gap over here. Asian draws, right? We have Asian lows, I believe, right over here. Let me mark that out for you guys. Right here. Asia lows. This is the draw that we targeted today. And we tapped into this 15-minute bearish fair value gap at market open. Here we go. Okay, so this is obviously a very strong bearish reaction to the downside after we tapped this 1 hour intermediate high within this 1 hour gap. We scale down to the lower time frames. We want to see if we respect this push lower in this 15-minute gap. And what do? Initially, we get a strong 5-minute bullish close to the upside, showing that we're probably not going to respect this gap. But on the next 5-minute candle, we actually deliver straight back down. On this candle, we deliver straight back down, and we actually inverse this 5-minute fair value gap that got created. So let me mark this out for you guys. Boom, right here. So on the 15-minute, this is what the 15-minute looks like, right? We have this very large wick, and we're expecting this 15-minute gap after we're pushing lower from this 1 hour intermediate high in this fair value gap. So that just screams bearish price action to me, even though on the weekly time frame, we are still kind of delivering from this this big gap over here. But we did fill the draw. We filled a few draws, right? We filled this gap here. But yeah, so this was the entry on the 5-minute that I took. Let's mark this out for you guys. Boom. The one thing that I really did not like about this trade is that I had a crazy stop, right? This is a 90-point stop, which honestly I haven't really taken before, but it still looks like a very clean setup, right? We're not expecting really any bullish price action at this point. News is at 7 over here, as you guys can see. So I actually did go break even on my XFAs, because I don't really want to trade through news. I de-risk on a couple of my evals, so I guess lucky me, I did that today, but why is this not working? Okay, as you can see, price kind of did not go our direction. If we had delivered, I would have won break even somewhere around here, but that didn't end up happening. It was still a good setup. I mean, like, I'm not very mad about myself taking this. The only thing is, like I said, it's a 90-point stop. It's kind of wide. But other than that, this is a great setup. I do think on the higher time frame, though, we are in a little bit of a, it's a little choppy, as you can see. Oh, wait, not over there. It's a little bit choppy, and we're still kind of pushing higher, but I was willing to put risk on the table, and I'm not mad at myself at all for taking this trade. So yeah, this is today's trade. Hopefully we have more news for the week. As you can see, this was today's news. This 7 a.m. PMI is when I moved my stops to break even. Let's see if I could get a weekly. All right, here we go. So for the rest of the week, we have tomorrow's trade, which is unemployment, and then Friday obviously is a bank holiday for a couple of these, but we also have these unemployment rates going on. So we'll keep that in mind for the rest of the week, and hopefully we can get another A plus trade that actually works out in our favor. But yeah, I appreciate you guys for watching, and I'll catch you in the next one.